The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at the overall market action on Tuesday, for the most part, it was we'll call it a risk-off type of day. Some pressure in soybeans and soybean oil spilled into corn and wheat. Kind of a mixed bag in the livestock trade. Outside markets were weaker. Let's talk about it. Joining us now for a conversation and market analysis, Jim McCormick with agmarket.net. Jim, good to talk with you, my friend. Thanks for joining us. Merry Christmas to you and yours. Glad you could be with us today.
Well, thanks for having me, and Merry Christmas to you and yours as well. It's hard to believe we're almost a week out, and here comes Santa. So where did the year go, Jesse? Amazingly fast for us.
Absolutely. It just feels like yesterday was January 1 of 2024, and here we are nearing January 25. Well, a lot of things on the mind of folks, and something here that has come up throughout the day Tuesday. We should touch on this first. I'd love your thoughts on what this could mean for the markets potentially, but talk of this continuing resolution on Capitol Hill is going to include some farm aid. Sounds like the number's around $10 billion. And just wondering your thoughts on this as we wait for final confirmation. What does this mean for the ag economy? What could this mean for the markets, Jim?
Well, like I said, it is a continued resolution. The government needs to be funded here at the end of the week, and this is where all the money's coming from, folks. But what we're hearing is essentially, like I said, if I'm sure everybody who's on social media knows the letter that came out from Farm Credit Services saying how dire a situation the American farmer was in. Some of the other soybean associations and corn growers associations kind of had the same sentiment. And the fact of the matter is the speaker's vote to get this CR through is very, very tight. And essentially, they managed to get this funding into it. Like Jesse said, it's about $10 billion. What we're hearing is going to be roughly $103 an acre on planted acres of corn in 24, $48 for beans, and $82 for wheat. And if you had to prevent plant, you get about half of that. There will be caps on these provisions, but in general, it is going to be an influx in money. I think it will, Jesse, help pay down some of the debt that the banks were definitely concerned about. But I also think it's going to have a kind of a bearish implication in the long run. My snap reaction is, when you look at the price of corn and beans for 2025, the acres say plant, the money says plant corn. The bean fundamentals right now are just atrocious. I mean, losing up to $1 and $1 a bushel in beans when you figure it out on the cost. So we are buying corn acres. Our group thinks it could be closer to 95 million acres of corn. That's about 300,000 more than we were just 2 years ago. And we thought maybe the limiting factor to these additional corn acres may be the ability to finance the corn acres. Well, now that you're handing all this money, in essence, to the American farmer, I would believe what he's going to do, a lot of them are probably going to use this to finance those corn acres, to finance that fertilizer. So what we're doing is we're probably just going to encourage additional corn acres that we don't really need, just based on the overall general economy that we're looking at right now. So we are going to solve a problem with the tight fiscal position the producers are in going in from 24 into 25. But if we're not careful and we do not sell rallies and we have a trend line yield, I got to stress, you could see prices a whole heck of a lot worse. And this temporary injection of money could actually cause us more financial stress down the line, I fear. But, that's kind of at least the 10,000 foot view I have at the moment.
Well, and a lot of unknowns here, a lot of questions as we're going to get details on all this and figure it out. But I wonder too, how quickly does this get distributed, et cetera, et cetera. A lot of things there. I mean, initially, I can't imagine that this would necessarily slow down, say, some farmers selling if they've already got their minds made up. But maybe I'm wrong there. I'm not sure, Jim. What do you think about that for a market impact? Could it slow some farmers selling down potentially?
I think it could slow it down a little bit, kind of depending on where that producer is at. Now, we know a lot of grain had moved this past week on this run, especially in the corn. The farmer was undersold in the corn. He definitely sold a lot of corn here. So they've caught up a little bit. But yes, I mean, the reality is, if you're a producer and you need the money, but you're still friendly, the markets, and you want to see how maybe this Freena crop plays out, this injection of money may be enough to be able to hold you out a little bit longer. So it could have a disruptive impact on the producer sales. I mean, and time will tell. Like I said, it depends on how quick the money comes out. The viewpoint of the industry was that the farmer was in a weak, quote unquote, fiscal position. And as we moved into 2025, the farmer was going to be forced to be a little more aggressive to sell grain to pay down these notes. Well, now that he's getting this influx from the taxpayer, he'll be able to take that money and inject it back to the bank, to Farm Credit Service per se, or any other bank, which will take the pressure off of the bank who's maybe pressuring him to sell the grain to pay down the notes. So it will have some domino effects, like I said, but the real question is how quick will that money make it into, the producer's, bank account?
Yeah, a lot of questions for sure. We're going to watch this as it develops. We get more finalized details. I would say, too, on Tuesday, Jim, the soy complex felt like a combo of factors that kind of led to that downside pressure that was kind of our downside leader. I think the NOPA crush disappointed some traders, even though it was a record for November. South American weather's good, etc. The fundamentals in soy are just not great per se. It just felt like a combo of factors kind of led that soy market on Tuesday, Jim.
Well, I think you nailed it. I mean, the fact of the matter is the bean market's been trading sideways for several months now. The spot bean, Jan bean, did take out its fall low. It did fight back late in the day as the bulls are trying to defend these lower price levels. I do fear eventually we're going to take it down. I mean, normally, Jesse, when you get these big moves or you trade lower like we had, then trade sideways for several months, normally you don't get a reversal in the market go back up. Normally it's after a round of consolidation like we've seen. You tend to get the overall trend stays intact and you get the next leg down. And I fear that's probably what's in store for us for two reasons. One, this Brazilian crop seems to be getting bigger by the day. The weather is fantastic. The government chose not to raise the crop last week, but a lot of private guys are 172 to 175. The Argentina crop may be shaved off a little bit if their weather turns dry, like some people think, but we don't believe it's shaved off enough to offset this monster Brazilian crop. And then secondly, we got to be very cognizant. We do have a new presidential administration that's coming in that is going to raise tariffs. It looks by all accounts, he's going to be very aggressive on tariffs. I know a lot of people say, well, it's a negotiation tactic. And it may be, but I also want to point out to people, say, look, remember, he slapped 19% tariffs on several Chinese goods 6 years ago, and those tariffs are still intact. And we now view that tariff as a revenue source. And now we've got all this funding we've got to do. We've got these new CR fundings. We've got the tax credits that are all going to expire. If they want to extend those and not blow the budget out, they're going to have to find ways to fund those renewal of those tax credits. Are they going to use these tariffs as a revenue source? And President Trump, if you remember, Jesse, back on the trail, one day he talked about it as a negotiation ploy. The next day he talked about that tariff as a revenue source. If it becomes a revenue source, it makes it, in my opinion, much harder to negotiate that tariff away. So, time will tell. But I think you got to be very cautious and a little bit nervous that a trade war could have dire effects, at least initially, just like it did in the first go around, unfortunately.
Should ask you a livestock trade real quick. We talk about this economic aid and the CR for American farmers, particularly on the grain side. It's been a better environment over in cattle, dairy, etc. You look at a market that's a little mixed on Tuesday. I'm wondering if this market's starting to get into the holiday trade a little bit. What's your feelings in that protein sector right now, Jim?
We're moving to the holiday trade quick. I mean, look at the cattle market. We're a week out from Christmas. The buying's done for Christmas. Now the market's to be worried about a little bit about, consumer, credit card debt and stuff like that. We do have we do have an interest rate cut anticipated tomorrow, but a lot of those people are assuming that's the last one for a little while, as they're worried about maybe some of the inflation we're seeing. I'm arguing clients, anytime we get cattle at these higher levels in your contract highs, you need to lay off the risk. There still is a lot of uncertainty going on. If we do get in a tariff battle, you could see countries slap some tariff on our beef imports coming in. The other thing we need to talk about, Jesse, a lot of people aren't talking about it, is the bird flu is still ravaging our industry. I think in the last 30 days, I saw one estimate, 14.5 million birds had to be liquidated due to this bird flu. This is continuing to become a problem in the dairy industry, but now it's still a problem in the chicken industry. If this gets out of control, you're going to see the poultry supply drop. That will shift demand back maybe to pork, maybe not so much to the beef. But that could have an impact down the line because, like I said, it's just because it's not in the headlines, it's still becoming a real problem, I fear.
No, that's a great point. It's something we need to keep an eye on very, very closely. Jim, I appreciate a few thoughts. I know you got a tight window here today, so thanks for being with us. And if folks want to reach out, I know they can get a hold of you guys there at agmarket.net online, and also take a look and sign up for your upcoming conference in Nashville in February, right?
That's it. I'll go to agmarket.net, sign up for the conference on February 2nd and 3rd. And I think as far as the calendar has not changed, I assume you're going to get to hear Mr. Jesse Allen sing for you. So I think that's probably the best reason to come myself. If you just want to hear Jesse, he's going to be staring at you at our cocktail party. Just going to give Jesse a plug here.
You guys twisted my arm enough, and I decided I would make an appearance on the other side of my other career as a singer songwriter. So look forward to being there with you guys, and of course talking agriculture too. Agmarket.net. You can find more information. Jim McCormick, always good to chat with you, my friend. Thanks for joining us this week on Market Talk. We appreciate it.
Thank you, and Merry Christmas.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.